let's imagine for a second that it's the year 2025. The entire financial world is being absolutely rocked by what you could only call a perfect storm. But, this isn't a crash. Not at all. It's an unbelievable climb. A moment where one of the world's oldest, most stable assets does something completely extraordinary. This is the story of the Golden Storm. Just take a second and look at that number. $4,371.78. On October 20th, 2025, that was the price for a single ounce of gold, an all-time high that pretty much left every analyst and investor completely stunned. So how in the world did it get there? Well, at the start of the year, gold was trading at about $2,600. In less than 10 months, it just exploded, rocketing up by over 66%. And along the way, it set 45 new all-time highs. That's not just a rally, that is an absolutely historic surge. So yeah, the big question is, how did this happen? This wasn't just some random fluke, no way. This was the result of several massive global forces all colliding at the exact same time. And in this explainer, we are going to break down exactly what those forces were. Okay, so the first driver, this is one that was happening quietly, kind of behind the scenes. It involves some of the biggest financial players on the entire planet, the world's central banks. For the third year in a row, central banks around the globe bought, collectively, about 1,000 tons of gold. I mean, that is a colossal amount. This steady, relentless buying created this really powerful floor under the gold price, basically preventing it from having any major dips. So, who were the main players here? Well, the People's Bank of China was on an incredible 23-month buying streak, just constantly adding to their reserves. And they were joined by other big buyers like Poland and Kazakhstan. Now, this kind of consistent, large-scale buying really begs the question, why? Why were they all doing this? This quote right here really nails the strategy. This wasn't about trying to make a quick buck. This was a defensive move. They were literally building financial fortresses with physical gold, getting ready for a world that they saw as more and more uncertain. And that brings us to the core reason. De-dollarization. In simple terms, countries just wanted to rely less on the US dollar. By buying up physical gold, they were creating a financial shield, a hedge against the risk of US sanctions and any potential bumps in the dollar-based system. All right, let's move on to the next driver and see how this all connects. Because it wasn't just about what central banks were doing. It was also about what was happening in the global economy, specifically with the US dollar and, you guessed it, interest rates. So, by late 2025, the Federal Reserve had started cutting interest rates, bringing them down to somewhere between 3.75 and 4%. Now, for investors, this changed everything. Why? It all comes down to something called opportunity cost. See, when your savings account is paying you high interest, holding gold, which pays you nothing, seems less appealing. But when those rates fall, suddenly the cost of holding gold pretty much vanishes, and it starts to look like a much more attractive place to park your money. At the very same time, the US dollar itself was getting weaker. And this analogy just explains what happened next perfectly. A weaker dollar makes gold cheaper for anyone holding other currencies, like the euro or the yen. That receding tide, well, it basically opened the floodgates for a whole wave of international buyers. And you can see that classic relationship right here. It's like a seesaw. As the value of the US dollar index, the DXY, went down, the price of gold went up. It's a fundamental dynamic in the gold market. And in 2025, it was in full force. But hey, this story isn't just about big banks and macroeconomics. The third driver is all about what happens when fear and that powerful feeling of FOMO, the fear of missing out, grips the general public. This is when the rally really shifted into overdrive. The world in 2025 was, frankly, a powder keg of uncertainty. A shocking 100% tariff was announced on Chinese imports, kicking off fierce trade wars all over again. You add that to the ongoing conflicts in the Middle East, in Eastern Europe, and tensions in the South China Sea, and what you get is a recipe for widespread anxiety and a massive flight to safety. And this is that classic safe haven mechanism in action. When things get chaotic, investors get nervous about paper assets, stocks, bonds, things that rely on a company or a government to keep its promise. So they run to gold. Why? Because it's a real, physical asset. It has no counterparty risk, which is a fancy way of saying you're not depending on anyone else to make good on their end of the deal. And boy, did they run to gold. In just the third quarter of 2025 alone, a staggering $26 billion poured into gold exchange-traded funds, or ETFs. For most everyday investors, this is how you get exposure to gold. But here's what's truly incredible. This wave of buying from regular folks, especially from Chinese households, was so huge that it actually blew past the levels of fear-driven buying we saw during the absolute peak of the 2020 pandemic. This wasn't just a government-led rally anymore. This was a full-blown people's gold rush. So, after this unbelievable climb, what happened next? I mean, nothing goes up in a straight line forever, right? Let's take a look at the aftermath and, more importantly, the real takeaway from this historic event. After hitting that crazy peak in October, the price of gold did pull back. It dropped about 8.5%, settling back down towards the $4,000 mark. And look, for anyone who bought at the very top, that can feel pretty scary. But the really crucial thing to understand here is that this is normal. In fact, experts see these pullbacks not as a crash, but as a healthy part of a strong bull market. That's a market where prices are generally trending up over the long term. These corrections shake out the short-term speculators and let the market build a much more stable foundation for whatever comes next. So how would a smart investor even approach a market like this? Well, one analyst, a guy named Munawar, he lays out a really patient strategy in 3 simple steps. First, don't chase the price. Avoid buying when everyone is euphoric and it's at an all-time high. Second, wait for those pullbacks, those healthy corrections. And third, build your position slowly. Buy in small, measured amounts instead of just going all in at once. And that leaves us with the really big question, doesn't it? Was the golden storm of 2025 just a freak event, a once-in-a-generation rally that was driven by a unique set of circumstances? Or did it represent something bigger, a permanent revaluation of gold's role, a fundamental shift in the financial world's weather patterns? That's the thought to leave you with.